Hey folks, David Frost, mystrategicforecast.com. Welcome for another episode of Common Sense Technical Analysis. Today is Wednesday, June 11th, 2014. You're looking at a daily chart of the SPY, and today we had what was technically a down day. However, if you remember, I've been talking about the lack of volume, and with the lack of volume today, the down day is really just a sideways day in disguise. Even though the Dow was down 100 points, the S&P was down, 6 points, 7 points. I mean, it's not really a down day. It just happened to be down. But what did we have? 53 million shares, I believe, today. What was it? 68 million shares. That includes the after-hours session. So that's too light of volume to make anything out of this whatsoever. So the plan stays the same. What I think could happen here for the rest of the week with the overall market is maybe you have some kind of a pause to up day tomorrow. And if we have an up day around half of what today was down, I think I'm going to hold true to my Friday down day. In the blog post from yesterday, I noted that Friday the 13th on full moons, and I know to some of you how crazy that may sound, but if you go to the blog post, you'll see that in history, I cited two of them. They signify market turns. So if we were down hard tomorrow, I would think that Friday would be an up day. I think the market would turn on that day. However, I'm still holding to the original scenario of a down day on Friday. So we'll see what tomorrow brings, and we'll take it from there. When you have a trading plan, you have to be willing to adjust the plan. So we'll take it one day at a time and see what happens from there. So there's not really much else to discuss on the market. Other than the fact that we're mapping out the rest of the week, and if I see the right setup, I think I'm going to take a short trade into Friday. So I'm going to take a position late Thursday because we potentially could see a gap down on Friday, and I don't necessarily want that to get away. So let's go over to the interest rate market, and we'll look at the 10-year. And the 10-year was the interest rate was up, half a tick today. And that's not much, but I still think that we're headed on the 10-year to about 266, 267, and then I would look for a pause. So not a lot of upside in the short run for the 10-year interest rate. But I think over the remainder of the year, we may see a different story. But when the market sells off, I think you're going to see some downward pressure in rates once again. And that's why I'm thinking this is going to stall out right around here, maybe chop around for a while. We'll see what happens. We'll play it by ear. But I don't think there's much upside left. And if we look at the 30-year, it's mainly the same picture. So my 30-year target is about 350. This pivot high here, and if we hit 350, I'm going to take some TBT off the table, and TBT is basically an ETF that says if the interest rate moves higher, the TBT moves higher. The TBT is inverse, basically the TLT, which is the 20-plus year bonds. So 20 to 30-year bonds represent the exchange-traded fund TLT. And right now, that's been on its way down. So if we take a look at the TLT, you can see that it started moving down as interest rates were moving up. So that's where we stand there. Let's go over to the gold market, and we'll take a look and see. We've had a nice bounce off this 119, 120 level in the GLD, but I don't think this is going anywhere. I think we're going to stall out either at the 20-period moving average, or in this case, 20-day moving average, or maybe up to here, 123, to where this gap window is right here on the chart. So that's what I think's in store for gold. I think there's lower prices ahead for gold, but there's going to be higher prices later in the year. So when we see the correct setup, we're going to issue the trade alert to the members, and I think we'll have a multi-month ride in gold on the upside, but not yet. We have to wait and see. We have to wait for the bottom to occur, and I don't think this is the bottom. So let's go over to the oil market, which is interesting. There was a pause day in oil today. There's nothing going on. I still say that I believe higher prices are coming, and for this one I'm going to move over to the weekly chart, and I want to show you the target, which is right here. I think 39.5 is not out of the question. I don't even think 40 is out of the question, and an overshoot here if we get any kind of geopolitical event, if we get any reason to push oil higher. I think this is the USO, by the way. Oil, I think, can go up to first 106, 108, then 110 on the crude contract. So that's where we stand there. In fact, I want to go back to something I was talking about recently in some of these videos and posts, which is, when oil moves up, they're going to find the reason, and I kept saying it's going to be a geopolitical reason, it's going to be a Middle Eastern reason. Well, today I just happened to be perusing before I made the video on the Yahoo Finance site, and I snipped this article out because this was on the front page. Asian shares retreat, oil nears 3-month high on Iraq concerns. Well, if I'm telling you oil's moving higher, and now all of a sudden the excuse is Iraq concerns, you see where the charts tell you what's coming, and then the reason is kind of plugged in after the fact. So we watch the charts, we watch the technicals, we let the market tell us what to do. Let's get rid of this. We let the markets tell us what to do, and then, we basically take a trade based on the setup, and we don't care what the news says. The news comes out after the fact. I know that's a hard concept for a lot of folks to grasp, but as time goes on and you listen more and more, you kind of get the point when we're able to, by the chart patterns, predict what the next move is, and then all of a sudden the next move happens, and then the media comes out and gives you the reason after the fact. Well, obviously we don't need the reason after the fact if we know ahead of time what's going to happen. So that's kind of where we stand in the common sense technical analysis camp. That's about it for today. I think we're going to wrap it up. We'll leave it short. There's not much to discuss as the markets churn around, but keep in mind we've got our eye on the ball for Friday. I'm going to give you another update tomorrow, and we'll take it from there. Common Sense Technical Analysis, David Frost, mystrategicforecast.com. Thanks for tuning in.